Well, new numbers from Alphabet this week confirmed a major fear that has lingered around the internet giant for years. The Google online search business is slowing. Search sales rose 15% in 2019, slower than the 22% pace of 2018. The stock's been on a little bit of a roller coaster this week thanks to those numbers, but is still on pace to finish the week higher. I had a chance to sit down with Ruth Porat, the company's CFO, and we talked about how Alphabet split its advertising revenue into its three buckets for the first time.
I often say that we've been on a journey and we've been expanding disclosure over time, whether it was providing more insight into what's our geographic breakdown or one-time run rates. We've looked at a number of changes over time, and our view was that this is helpful. So we took our sites, what was our sites revenue, and broke it into what's search and what's YouTube, and that gave everyone a slightly greater insight into what is the business and what have been the trends in the business. And similarly, I think providing the revenues for cloud, we've been investing heavily in our cloud business. Really excited. We ended the year with a $10 billion run rate, more than a $10 billion run rate business. We have an extraordinary leader. He was actually just up here this past week, given the opportunity in cloud and what we're doing and the extent to which we're investing. We're excited about it. And so, again, giving people a slightly greater insight into the momentum in that business.
It seems, obviously, from the numbers clear that the biggest growth and still the part that really fuels you is the ad business and the growth in ad revenue, which will be driven by data intelligence, right? How people can use it. And there again, you may have to deal with some pushback, maybe even regulations on that front. You hear from companies like Basecamp about bias in ads, in placement, in search results. Just the thinking around how you might be limited in that growth of that important part of your business by the regulatory environment.
So a lot of what you see with search is it's really context, and so we're addressing what is needed when you need it. And so we do continue to invest meaningfully in the search experience, making it better for users and helping with advertisers. But I want to go back to the premise on the question as well, which is one of the things we're really excited about is we're continuing to invest meaningfully in search and the overall search experience, but we're also investing to create other additional businesses, for example, in cloud. And when we talk about the investments that we're making, whether it's in people or in compute capacity, it's supporting the growth and momentum that we're seeing in the cloud business.
You obviously, innovation is the lifeblood here, and that's been a big, huge investment, always has been for Google. Is there a concern on your part? We've got the election coming up in the fall, some pretty strong language out of some candidates about big tech, and where does the regulatory environment impede you to do the things you want to do?
Probably one of the most exciting things for all of us is what's going on with AI and machine learning. And as we've talked about quite a bit, there's extraordinary opportunity to the upside, but like with any technology, it's imperative that we focus on potential unintended negative consequences. One of the areas I'm personally really proud of is the breakthroughs that we've had with AI in the areas of health and life sciences. You know, late last year, we announced that we had a breakthrough with AI in detection of early stage metastatic breast cancer. Now, I had breast cancer and was treated at an extraordinary hospital. Not everybody gets that kind of care. And so the ability to use AI to actually be able to deliver the same kind of care I had is extraordinary. I spoke to my oncologist about it, and he said the only way to democratize healthcare is with AI. And so we're looking at applications like this and saying there's such potential for upside, but totally understand, as throughout history with technology, that it's our responsibility to think about the negative unintended consequences. And that's why over a year ago now, we published our AI principles, and why our CEO, Sundar Pichai, recently spoke about the value in looking at where should AI be regulated and thinking about, again, proportionality. Let's make sure that we capture the upside while addressing what might be unintended negative consequences. And that's how we're looking to approach it. And we want to work constructively with regulators to make sure that we get, as a society, the benefit from technology while minimizing these unintended consequences.